Hello, everyone. Welcome to our webinar, Insurance for Apartments Made Easy. Habitational is a hot topic these days, so hopefully Michelle will do a great job making this a easy process. My name is Anae Augustini. I'm CEO of CID Insurance Programs, and Michelle Belden, our apartment specialist, commercial underwriter, she is going to be teaching the course today, and so you'll get a lot of good information from her because she's a specialist. Also, I want to mention Jacob Cole, who's our marketing coordinator. He takes care of everything from behind the scenes. So without further ado, I'm just going to go over a few logistics. As you know, with most webinars, you'll be muted. You'll be able to hear but not be able to speak, but your voice is important to us, so please pose any questions that you have in the chat room off to the side here, and we will stop. Michelle will stop and answer questions as we go throughout the webinar. At the end, there'll be a quick survey, and again, your voice is important to us. We appreciate your feedback, so please take the survey at the end. So now, what are we going to learn today? As I mentioned, HAB is really changing a lot, and so this is a great time to learn the latest on what's going on. So the place to start is to really be able to recognize the different types of residential buildings. That she's going to spend time on that. Also, how to underwrite an apartment complex, and what do you want to be looking for that are going to get caught on inspections, and then what are the property coverages and components for an apartment building, and how best to insure them. Usually, apartment applications are very detailed. There's a lot of information required, so Michelle's going to go over how to make it an easy presentation to her so that she could quote quickly and efficiently and competitively for you. And then she's also going to go over the industry changes and trends that are going on right now in the industry. Without further ado, I'm going to introduce Michelle and turn it over to her.
Thank you, Anae. Hello, everyone. Welcome to our webinar. So like Anae said, I'm going to start off just talking about different types of residential buildings. So, you know, there's apartment buildings, mixed-use buildings, community associations, whether those are single-family homes or condo associations, 1 to 4 family dwellings. So they can all somehow get confusing. I can understand it. I can see it. So an apartment building, by definition, for us is 5 or more units. So whether that's, you know, 5 individual units in one complex or one building with 5 units or more, as long as the makeup of the entire complex is 5 or more, that is an apartment to us. Mixed-use building, people use that terminology differently. For me, a mixed-use building means that there is both a commercial exposure, meaning that most likely, you know, it could be a multi-story building, and on the bottom floor there's like a little coffee shop, maybe some offices, and then on the top floors there are residential apartment units. That is a mixed-use building to me. And then, like I said, community associations, that is where, you know, an association is made up of multiple unit owners who all own, you know, their home or their condo itself, and then the association provides insurance for the general liability for the common areas of the association, and if it's a condo, provides coverage for the building. And then 1 to 4 family dwellings, there is a gray area with that. Also, it also kind of depends on the state, because some people want to consider a 1 to 4 family dwelling type thing a 4-unit apartment. In some people's eyes, it's not an apartment. Other people's it is. So it kind of just depends on the carrier and who you're going with. And also 1 to 4 family dwellings falls in that gray area, like I said, because it can either go as on a commercial policy or a landlord's type personal lines policy. So it really depends on the carrier and how they will write them. And then if we could pop to the next slide. And as I was saying, just a definition of an apartment for us, like I said, is 5 units or more. Doesn't matter how those buildings make up that complex number of units in those buildings. Just as long as we have 5 or more in there, then to me, it's an apartment. But if it's just, you know, one single family home and you're renting that out, as I said, it could either be written as personal lines or commercial lines. It just depends on the ownership the carrier, and just certain underwriting characteristics. For example, here in California, 1 to 4 family dwellings, they, on the commercial side of things, can be difficult to write because of the earthquake requirement. So sometimes it's better to write them as personal lines than commercial. But then, personal lines might have underwriting criteria that kick it out of personal lines, so you have to take it commercial. So like I said, that one kind of falls in a gray area, but you'll see as we go. But just different things to be on the lookout for because it applies to both apartments and 1 to 4 family dwellings. And then we just wanted to show you guys an example. I mean, I pretty much feel like everybody knows what an apartment complex looks like, but just to give you an idea, the one on the left clearly has multiple buildings making up the complex. So whether those buildings have, 1 unit in them or 5, it doesn't matter. They're made up of multiple buildings. And then the one on the right, it's not the greatest picture because you can't see it all. So we had to shrink down a little bit. But it is really one large building all connected together, just showing you the different types of building makeups there can be. So let's get down to underwriting characteristics, the things that I'm looking for in order to quote your risk for you. So the important things that we need in order to quote the risk. So obviously I need to know the number of units because that's what the general liability is going to be rated on. If there are multiple buildings, I definitely need to know the number of buildings because most of my markets cannot offer blanket coverage. And if they can offer blanket coverage, we still need that number of buildings because we're going to need the building breakdowns to provide to the carrier. Then we want to know if the complex has any amenities. Do they have a pool? Do they have a playground? I mean, anything else you can think of, a little tot lot, like a sports court, a basketball court, something like that. If they have that, we need to know about that because we need a rate for that exposure. Their annual rents, that's what we'll need in order to offer business income, so that information is important. And then if it is a mixed-use building, like I was saying, where it's commercial and residential, we need to know the type of commercial occupants that are in the building because we have to be able to obviously make them meet the carrier's criteria. So if there's certain occupants in there that, don't fly with one carrier, they may fly with another. So that's why we need that information. We need to know how occupied the apartment complex is. So, is it 50% occupied, 70%, whatever that may be, because the vacancy rate can affect market availability. And then, is it professionally managed? Is there a landlord? We're looking for, some really well-maintained buildings. You could be owner-managed and have a great building. You could be professionally managed and have a great building, or vice versa. It's just the management that works for the insured. And then the building characteristics. This is really important when it comes down to the property side of things. We need to know the age of the building because that does affect market availability. I know you guys are probably well aware, seeing it with your own markets or through other wholesalers, that carriers have definitely tightened up on what type of the age of the building that they'll write. Some carriers don't have an age restriction, others do. So knowing that is important. Knowing if the building's been updated, and what we're looking for is complete and full updates to the wiring, plumbing, heating, and roof. And it varies by carrier, but I would say within the last 25 to 35 years is what we're looking for. And then the size of the building. Is it 5 stories, 1 story? That is important information to know. We need the square footage of the building because that will come into calculating the building limit, so we need that information as well. And then, as I had already mentioned, the condition of the building itself, where it's located, how proactive they are with maintaining the building, maintaining the property, whether the building is sprinklered or not. That does play an effect into things because some carriers do offer sprinkler credit, so that's important information to know. And then as I said about the condition of the building, is there vandalism or graffiti on the building? Is there trash and things laying around the building that can be cleaned up to keep it in better condition and make the property look nicer? And I do see we have a question, so I'm going to answer that real quick before we pop over to our next slide. It says, let's say if the property is a total of 5 units, but the building 1 is a single dwelling and building 2 is 4 units located on the same lot. That is fine. We would still consider it an apartment because it's located on the same lot, it's in the same complex, so that would qualify for me as an apartment. And then on the next slide, we're going to have just a few more pictures of different types of apartments and just different things to be when we get to the how to like evaluate property and things like that, what items you should be taking into consideration. So like the bottom right picture has a fence on there. You want to be making sure that, you know, your limit is including the fence in there as well, in the event, you know, there's damage to that as well, so we can provide coverage for that. The top left picture, it looks like they're two separate buildings, but they have that common causeway right there. That would make it a single building to me because it is connecting. Had that causeway not been there, then I would be looking at that as two separate buildings. Just like the bottom left picture shows you, you can clearly see that there's multiple buildings in that complex. So we would have to be writing each building. I wouldn't be able to blanket the coverage together because it's not one building. There's at least 5 buildings in that picture, so we would be needing information on 5 buildings for that one. And so let's get into what inspections are looking for and what we're checking for on the front end to try to help you guys mitigate for the insured as well. So inspections are going to go over, they want to check our rating to make sure we've rated the policy correctly. And then they also are going to be looking for anything that could potentially pose a claim situation for the insured to help them mitigate those issues so, you know, they don't have losses. That's what the inspections are here to do. So obviously, like I said, apartments are rated on the number of units. So they would be checking that to confirm the number of units we told them when we rated and bound the policy is correct. And they're also going to let us know there's a significant vacancy rate in there because that could, as I said, affect the underwriting of it. May no longer qualify with a certain carrier if the number of vacancies is too high for them. And then also, obviously, it's going to check all the building characteristics that I mentioned, the square footage, the construction type. That is really important because there are different rates depending on the type of construction. So whether it's frame, joisted masonry, masonry non-combustible, and the list goes on, we need to know that information and make sure we're rating it properly because there are obviously different rates that are associated with those. The age of the building, wanting to know that. The updates, that is extremely important because, again, that helps it whether the risk still meets the carrier's guidelines and also if it meets their guidelines for special form replacement costs, which pretty much I know everybody's after, but there haven't been the updates. It makes it a little difficult. So depending on the carrier, most likely may have to offer basic ACV if those updates to the wiring, plumbing, heating, and roof have not been done. And then I'm also going to be checking the type of electrical. So I'm sure a lot of you are aware that like Federal Pacific, Zinsco panels are generally prohibited with most markets. There are some out there that will write them, but they tend to be something that most carriers do not like because they pose a high fire hazard. So having those type of electrical panels, if I know that information right off the bat, I'm unfortunately going to have to decline the risk because it's just not going to meet any of my carrier's market underwriting. So I wouldn't be able to help with those ones. And then also we're looking for the buildings to not have aluminum wiring, knob and tube, fuses. And I get questions from agents asking, like, they have knob and tube wiring, but they're planning on updating it. Can you offer terms? I wouldn't be able to offer terms until the wiring has been updated. My markets will just not take a look at it at all until that's been done. And then knowing the type of plumbing is helpful. So, you know, whether it's copper, PVC, galvanized, that's important to know. I see we have one question about the types of panels. So generally it's the Federal Pacific, Zinsco panels are one of them. There is the stab lock, and I feel like I'm forgetting one. The civilian ones, I believe. But I can definitely, if you want to shoot us an email afterwards, I can definitely get you all those. But off the top of my head, those are the ones that are coming to me right now. And then, as I had been mentioning, the condition of the building, and not just the building, the area surrounding the building. So we can definitely, you're wanting to know, are there cracks in the foundation of the building or on the building itself? That's something the carrier is going to be, or the inspector is going to be looking for. And then in the parking lot and the sidewalks, are there potholes? Are there uneven areas that could cause a trip and fall type claim? And I'm sure as many of you know, trip and fall type claims, especially if they get a bloodthirsty lawyer, can definitely drag out and pay out more than you'd ever want them to. So, you know, looking for those things to try to keep the walkways clear, and wanting to, you know, limit what potential, I mean, we can't stop everything from happening, but our goal is to help you guys, help your insureds limit the possibility of a claim occurring. And then we were wanting to look at the type of stairways and railing pickets, so whether they're horizontal or vertical, and the width with those ones. If a building has horizontal railings, most carriers aren't going to want to accept that, because if you think about it, it acts like a little step ladder. So picture a toddler deciding to climb up on the top, and they get to the top, and then what's going to happen when they get to the top? They're going to fall one way or the other. So they're either going to fall down, a couple stories, or fall back onto the patio. So those tend to be prohibit with most markets. So a lot of people, when they have those, they tend to put up a mesh barrier or something like that, some sort of barrier so you can't climb on them. So if that's there, then a horizontal railing is not a problem for us. And if that is found in an inspection, that would be something we would be looking as a correction for you to be able to do. And then, are the appropriate life safety equipment there? So remaining fire extinguishers, smoke detectors, depending on the state, like here in California, carbon monoxide detectors are required. So those are specific things we're looking for, and obviously we're looking for them to be, the fire extinguishers to be currently tagged and dated. So if they're not, then that will be a requirement to be fixed in a loss control inspection. And then if there's a pool, is it fenced with self-latching gate? If the pool is not fenced and doesn't have a self-latching gate, then I'm not going to be able to help. I do know some older complexes, and this is true, I've seen it on the community association condo side as well, where, people's patios back up to the pool, and their patio itself might be enclosed, but the pool itself is not fenced. That unfortunately won't work for us because it's not enough of a barrier, to keep a small child out, in the event to keep them from accidentally going into the pool and not knowing how to swim. So that's why we're looking for the pool to be completely fenced with a self-latching gate. And then, as I had mentioned, if they have a playground, or we're wanting to make sure there's a soft surface underneath it. So it can be any soft surface, mulch, rubber, sand, as long as there's just something soft in there. It's not just straight concrete, because I'm sure you all know falling straight down on concrete would probably not feel the greatest. All right. And then I see we have another question about our maximum coverage for building. I will get to that. We have a couple slides going over property information, so I've not forgotten about your question, but I will answer that in a few slides. All right, so some other things. What do I need in order to determine when you're calculating the building limit? So for replacement cost, it varies. Can vary because of the state, the construction type, the height and the square footage of the building, the age of the building, the condition of the building. So for me, when I get a risk in, one of the first things I do when I get to the property section of the application is to look at what the building limit is and what the square footage is. So I take, obviously, to figure out what your cost per square footage is just taking the building limit, dividing it by the square footage. So most of the time, I would say my average cost per square foot ranges anywhere, and as I mentioned, it's all going to vary by state and location and things like that. But I would say on average, I generally say anywhere between about $125 to about $250 on the high end for the cost per square foot, which is generally totally fine and within my market's availability. Not nothing where they would really question it. Generally, when we get over that $250 mark, where I would be, if it's significantly high, like the other day I had one that was $588 a square foot, which is extremely high. So in order to get that to go through with my markets, I would need a building cost estimator or replacement cost estimator, whatever system you use to run that. I know some agents use it through, if they're a farmer's agent, they use it, the little tool that they have to run one. Other people use third-party ones such as Marshall & Swift, CoreLogic, things like that. So I would just need some sort of building valuation report showing what the replacement cost is of the building. And if the replacement cost estimator comes out with a lower amount than what you originally requested on your submission, I'll have to go off of the replacement cost estimator. Some carriers let us go about 10% up more from the replacement cost estimator, but we want to stay in that range because that's truly what it's going to cost to rebuild the building if there was a complete loss. And then we also kind of ask for them too when we get things with cost per square foot that is less than $100. In some states, obviously, and all the construction type plays into that as well, it doesn't take as much to rebuild, say, in Texas as it does here in California. So when they have the lower ones, we can still offer replacement costs just as long as we have that replacement cost estimator showing that truly will only cost that much. If we get down to like $50 a square foot, things like that, I would say we would have to pretty much offer basic ACV just because it's not going to be insured properly. And our, depending on the carrier, I would say minimum, we have an 80% co-insurance clause. Some are 90 and some offer agreed value, just depends. So as long as they're at least 80% insured, the insured won't be penalized. But if they're underinsured and they're underinsured by and less than that 80% mark or 90% mark, depending on the carrier, then if they had a loss, they could be penalized because they didn't insure the building to 80% of the value. So that's what we're looking for there in regards to calculating the building limit. And then had been talking earlier about having multiple buildings in a policy. So that would be our statement of values. And if you could, thank you. And then, so a statement of values, or an SOV, as I'll refer to it as shorthand, it breaks down the buildings by the number of units, the square footage, and your requested property limits. So as I have said multiple times, most of my carriers do not offer blanket coverage, so I need a breakdown of the buildings. So if there's 3 buildings in the complex and they're all each the same, I would just need the information 3 times for that building. If there's, one building that has 5 units, one building that has 8 units, and one building that has 10 units, then I would need the breakdown and the square footage of each of those buildings and the property limits associated with them so I can offer coverage. So as I said, we can use it on multi-location buildings or multi-building complexes. So multi-location, if the insured owns, like 4, 5, 6 complexes, we could definitely look at that. Again, I would just need to break down at each location, and if each of those individual locations have multiple buildings, I will need a breakdown at each location for the building so I can offer you guys terms. And then other things you would want to be looking to include for additional property coverage would be, do they have a detached garage or a carport? Is there a marquee in the front that's not attached to any of the other buildings? Is there fences? Some people insure the pools. If there's a playground, the playground. So other components that could potentially need coverage for, we would want to be looking for that. Some carriers that we have offer like a bot policy where they have some of these as like throw-on limits for some of these things, but not everybody has that. So we always suggest if there's something specifically they're looking to insure and it's of a higher value, then to definitely have that scheduled on. And then determining what was attached versus detached property. So that's also important to know, because if it's attached to the building, then we're going to incorporate that into the building limit. If it's a standalone sign, then it's going to be its own line of coverage under the property. And then on our next slide is just an example statement of values that we use. Again, you're welcome to use your own. If you don't have one, we have this template on our website. Just makes it easy. It's an Excel spreadsheet. And like I said, this is the basic information I'm looking for. If they don't have the other property structures, then none of that information. I don't need any of that, but I truly just need the number of units per building, the square footage per building, and what your building limit is going to be for that building. Those are really the main things I'm looking for. Some people's are extremely detailed, and I appreciate that because it gives me other information that I'm looking for. But for the bare minimum basics, this is what I'm looking for when it comes to breaking down the information for me for the buildings at each of the locations. And then, so next we're going to talk about the different types of coverages that apartments need. So property, obviously that's the main one, insuring the properties to the building and any other property components. That is first and foremost one of the most important coverages for an apartment owner. Others would be the business income, in this instance the loss of rents. When it comes to loss of rents, most of my markets do not offer ALS, so I do need what the annual rents are in order to offer that coverage. We can also offer building ordinance. Coverages A, B, and C are available. A included up to the building limit. B and C can either be individual limits. I generally see them anywhere from 10 to 20% of the building limit, or it can be a B and C combined limit, again, 10 to 20%, or some people just pick like a set limit, say like 50,000. It's really up to the choice of what coverages you're looking for and what limit you would like those out. We can also include equipment breakdown, and then most carriers have a property enhancement endorsement. Each carrier is going to be a little different, but we can include those on there. Generally, if they do have a property enhancement endorsement, that's generally where you'll find like the water backup coverage. If there's not that coverage covered under the endorsement, it's probably something we can schedule on as another property coverage. So if you're looking for that coverage as well, please put a limit on there so I know that you're looking for that coverage. And then the general liability, and then the hide on non-auto, we can add that on there. And then we can also offer fidelity. I would handle that coverage as well. And then work comp, that would be my coworker Darby, and she can help you with those ones. If you have an apartment, where there's an on-site manager and that's the employee of the insured, my coworker Darby can help you with that line of coverage. We are not a market for earthquake or flood, and then our market availability is going to vary by state. In some states we have, like here in California, our home state, we have a lot more markets available than say we do in Texas. And I will get a little more into that when I get into our industry changes in a few slides. All right, so coverage features. Most of our markets on the GL side of things are offering 1-2 limits. We don't have too many markets that offer 2-4 limits, but if we can offer it with them, we will if you're requesting it. Otherwise, we can offer an excess or an umbrella quote. The highest we can go with habitational, so whether that's an apartment, a condo association, or a 1 to 4 family dwelling, is $5 million. I'm sure a lot of people have been seeing that people are tightening up on the excess markets just as much as they are on the GL and property side of things. So limits are becoming less available. People are wanting to only hand out smaller limits just because claims have definitely become, it's been heavily written and people are paying out not only on the GL but also on the umbrella. So it's definitely posing a problem. And then for property limits, I would say we do best with things that are up to $50 million. Again, this is going to depend on the construction type of the building, whether it's sprinklered or not, and where it's located. We can consider ones with higher limits. It's definitely something we can discuss on a individual basis for those ones to see if we would have an option for it. But I would say up to $50 million is probably where we're best at. Going over that sometimes gets a little tough. But again, if I can't do those higher property limits for you, and you have another option for that, I can always do monoline GL. That's not an issue for us. So we can write on a package basis or a monoline basis, whether it's monoline property or monoline GL. If you're looking for just a monoline excess policy, we could definitely assist you with that as well. And then as far as property coverage goes, special form replacement costs, we do have that available. And that is our goal to offer to you guys. But it is going to depend on the building limits. I'm sorry, not the building limit, the building agent of the updates. So if it's an older building, we're wanting to know when was that wiring, heating, plumbing, and roof updated, because that will affect whether or not we can offer special form replacement costs. So if we can't offer special form replacement costs, we can definitely look at offering basic ACV with some of our markets, depending on if that's something the insured is okay with, or you don't have another option, and at this point they don't know if there's confirmed updates or not. So that is something to look for. And then also the mortgagees and lost payees are automatically included at no additional cost. Typically, not too many other types of AIs are needed. Generally, if they have a professional property management company, they are considered to be part of who is insured on the policy, so they don't necessarily have to be scheduled out, but some carriers will schedule them out if they're requested to. And then just some other things that I had questions I knew we had about coverages. I know we get a lot of questions about deductibles. So it does vary. Some carriers will offer a deductible per location and per building. So it really depends on the carrier and what the class is. And then for you agents in the areas that are affected by wind and hail, the wind and hail deductible is also going to vary by the carrier. We have some markets who will only offer coverage in those states where wind and hail poses a problem, and they'll only offer coverage if they exclude wind and hail altogether, which obviously isn't a great thing for people in those areas. However, I know there are options out there where you can buy a wind and hail deductible. That is not something we'd be able to assist you with. And then, like I said, we do still have some other markets that will consider wind and hail. It just is going to vary by the carrier and what we have available depending on the risk. And then just this little apartment risk profile that we built for agents as a little tool to help you gather basic information. So whether it's a new client for you or possibly a new purchase for an insured, just a little thing to get some basic information down in order to transfer this information onto a cord forms and a supplemental. I cannot quote off of this, but it does help you, you just get a real quick phone call. You can just jot some information down, have that, so then you can do your further research to put together a submission. And then I see we have a question about my turnaround time for submissions, and so I'll answer that here. So for an apartment submission, I am looking for an Accord 125, 126, and 140, including all the information I've talked about this whole time, the number of units, the annual rents, if there's pools and playgrounds, we need that information to be able to rate it. And then I do need an apartment supplemental. I can work off pretty much anybody's apartment supplemental. They ask a lot of the same questions, so that's fine. If you don't have one already completed or you don't have one, we have an apartment supplemental on our website that you can use as well. And it also has a little cover sheet that tells you all these things that are on this slide of what the information we're looking for in order to get you a quote. A statement of values would only be applicable if there's multiple buildings, so I would need that in that instance. And then 3 to 5 years loss runs. If you have loss history, please send it in. It is really important. It's really helpful because especially if they've had losses, it's going to, it's going to be, am I going to be able to write the risk because of the overall loss history? Or two, okay, they had some losses, but they closed, they were smaller amounts. Like I have to present this information to the carrier. So if they have had losses, I do need to know loss details. I need to know what happened. I need confirmation that the damages have been repaired. If they could do things to try and prevent those types of claims from happening again, those are things that the carrier would be looking for, that they would be taking into consideration what they need in order to determine if they can offer terms or not. If you have a target premium, that's really helpful as well. And then I saw we had a couple other questions, so let me get to those. So my turnaround time, as long as I have the necessary information, I'm generally at about a 2 to 4 business turnaround time. Right now, I'm a little bit more backed up. So I would say I'm probably more at like 5 to 7 business days right now. I'm doing the best I can, and I'm working in date order. So if yours is a future date, like say December, I've gotten a few of those. I probably won't be getting those until probably next week. Just trying to keep up with everything. But if it's a new purchase or something like that, please let me know so I can prioritize your submission accordingly. But my goal is generally 3 to 5 business days to get out terms, as long as I have everything I need. If I don't have everything I need and we have to do, a little back and forth, it could take a little bit longer. And then let's see, we have another question. Somebody's asking about condos and whether, I'm assuming you're wanting to know the difference between what coverage is for the unit owners versus what requirements are of the association. That would really depend on the makeup of an association, whether it's a condo association where the association itself is responsible for ensuring the exterior of the building and the common areas, and then the individual unit owners are responsible for ensuring the interior of their units, or an association that's made up of single-family homes where the association is only required to ensure the common areas of the association, and then the individual unit owners are required to ensure their individual homes within that association. I hope that helps. If you have other questions, feel free to reach out to me, and we can definitely go over that.
So Michelle, I could probably help with that just a little bit further. You really want to look to the governing documents of the community association to determine who's responsible for what, because that does get into a gray area and is different. And some carriers will only insure uh, uh, to the finished walls, and others will do a bare walls policy, or give the option of either. So that's, you really need to look to the governing documents and provide the carrier or provide Michelle with those documents so that the carrier can determine which way it needs to be insured. There was also there was one other question here that I might be able to help with, Michelle. It's the one about property management companies that are providing coverage for multiple locations. I'm going to assume that the management company has a master policy and is providing the insurance for properties that they manage. And you're asking if we would provide the professional liability for the management company. That would really we'd have to take a look at the risk, and that would actually go into our professional lines department. So if you have questions, Lexi Johnson in our office would be the person to reach out to.
Yes. All right. And so my last bit of information I want to go over are just some industry changes that I've been seeing, that I've also been hearing from other agents as well, and things I'm seeing with my own markets, and just the talks that I'm hearing. And if we could pop to the next slide real quick. And then,
are you there?
Yes.
Okay.
All right. So for the industry changes that I've been seeing, especially here in California, most carriers now are brush mapping or wildfire mapping. Everybody does it a little differently, which one they're doing. Each carrier runs their own type of risk meter, so it's not necessarily across the board that everybody's using the same system, but that is something that we are using, that we're seeing a lot more of. So if they have a higher wildfire score, most markets are not offering that are not wanting to offer property coverage. So I'm sure a lot of farmers agents are well aware of seeing carriers getting off of risks that are in those higher areas. We do have some options that will consider the risks that are in the higher wildfire areas. However, the property rates are not great. So if you have other avenues for the property, I would definitely recommend looking into that, because some of them I've been seeing, say, are $2.25 per 100 in property coverage. So if you have a higher building limit, you could easily get yourself over $100,000 in property coverage. And that's probably going to be real sticker shock to the insureds, seeing numbers like that. And then some other things to be looking out for are, I know carriers, Travelers is one of them. They have tightened up on the building age that they will accept. I think right now they're in like the 70s and 80s, and that really puts them kind of on the edge about if they want the risk or not. So there are a lot of changes happening in that. Some carriers have decided to make a change in the number of units that they're willing to consider writing, the overall size of the building, the property limits on the building. So I've definitely seen a lot of changes in those. And then pretty much most markets have, I'm sure as you've seen, have taken a rate increase. Some of them aren't too bad, and then other ones are pretty significant. And then, or you have people who are exiting the marketplace altogether. So they're definitely for apartments and other lines of coverage are just leaving and don't want to write these risks anymore. And then other carriers I've been seeing on the general liability side of things where they've been they've been adding on a habitability exclusion. And I've also been seeing some carriers starting to exclude personal advertising injury as well. That's becoming a thing as well. And then one other thing, I've been getting a lot of phone calls and emails from agents in Texas, and just a couple things on that. Texas, I will admit, is, as I'm sure you agents in Texas know, it is a tough state for me to write in. So it's something that we're not able to do a lot of. And I would say in Texas, we are looking for risks that have limits less than 3 million TIV and maybe own like 1 or 2 locations, but not too many locations. So that's that's all I have for everybody today. So I appreciate you all joining us. It's really great that you guys are here and wanting to learn about this information from us. So if you have any questions, feel free to post them in the chat. If we don't get them answered right now, we will send you guys an email and make sure we get those questions answered for you. Visit our website at cidinsurance.com and you'll see, our applications are on there, different broker tools we have on there, other upcoming webinars and things we may have. You can send your submissions in direct to me. If you need to contact me, feel free to give me a call or shoot me an email. I'm happy to help in however we can. And then this webinar will be recorded and we'll post it on the website. So if there's something specific you want to go back to, you're more than welcome to revisit it and just learn a little bit more if you have any questions. So really, we appreciate you guys.
Great. Thank you guys for joining us. Great job, Michelle.
Thank you.
Bye, everyone.